It's Mike Hambright with the Flip Nerd VIP show. Today I'm back with a very special guest and a good friend of mine, Andrew Waite, who's the publisher of Personal Real Estate Investor magazine, who just is in their 10th year. We're going to have Andrew tell us more about that. I hesitate to say that he is a leader in our industry, use those words because I've used that several times. He truly is one of the very top leaders and voice of the real estate investing industry. I'm excited to have him here today. So before we get started, though, let's take a second to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Andrew, thanks for being on the show.
Thank you, Mike. How are you doing?
I'm fantastic, and how are you, sir?
If I was any better, I'd be twins.
Uh-oh, your wife? I don't know if your wife would like that.
Oh, that could be a problem. Yes.
Yeah. Well, I'm glad you're on the show. You're obviously also a big supporter of FlipNerd.com and a big supporter of really everybody that's pushing the envelope in the industry to try to improve the real estate investing industry. Why don't you take a second and just introduce yourself for those that don't know who you are and tell us a little bit more about you.
Well, just to make sure that the definition of what and who we support, Mike, is the big thing for us is we're worried about standards-based process that's sustainable, because what we think is part of the issue that we've seen with real estate investing is that it not only is it being a rather unsophisticated business that's allowed a lot of predatory behavior by opportunistic educators and others, and it's why I've liked Homevest for so long as being a really sound and sustainable alternative. But when we got into this business 11 years ago, August of 2003, we started planning and producing and selling the magazine. And what we found is, or what the mistake we made was, we were going just after the flippers or the folks that showed up at a real estate investment club. What we didn't realize is that when we analyzed these people, it turned out that about 10 to 15% of the market were indeed flippers. Most of the real estate investment was, mom and pop owning a couple of doors, a house, a small apartment building, a duplex or whatever that they were renting. Now, maybe they'd bought it in a distressed condition and renovated it to the ability to rent it at retail. But whatever it was, they didn't define themselves as investors. They defined themselves as average Americans with some investment in real estate. And it may sound like a nuance, but it's very, very critical in the way you position yourself. So if you're positioning yourself as a investment magazine like we do, or a guy on a yacht with blondes at midnight trying to pitch education, these people do not relate to this. Yeah. They're looking for just basic help in terms of optimizing their investment and making sure they're doing a good job for themselves, their family, their kids' education, and their retirement. And you can't build credibility in that space by being boisterous, front of the room, credit card machines in the back of the room, opportunistic education thing. So after our first 2 or 3 years as thinking that was our market, we did some analysis on who was our market, discovered this, and then started going a little more institutional in our approach. And what that has allowed us to do is, first of all, to retain our business during the end of the real estate market as we knew it in 2007, 2008, because businesses were trying to find out how to exploit this asset class. That's, surprisingly enough, it's a vast asset class, and I'll get to the numbers in a minute. But it was an asset class.
And it's very fragmented. Like you said, it's very fragmented. That's always been interesting to me. I've come from corporate background as well, and was in a huge industry, one of the largest industries in America. And the company I worked for was number one in the space, so they had 6% market share.
Right.
It's just very fragmented.
Yeah. Well, the things that we worked out was, first of all, calling them investors was not the right title. They were just average Americans with real estate investment, nuanced but important.
Right.
The second thing is, when you look at the installed base, if you will, of rental properties, coming from the computer world, obviously that's where the installed base comes from. But the existing asset base of single families and houses less than, or properties less than 4 doors that fall into that category, of the total rental households in the United States, 58% of them are housed in homes and properties owned by individual investors. Wow. Mr. and Mrs. John Doe, right?
Right.
Or Mrs. John Doe or Jeanette Doe or whatever. But the point being, these were not institutions. And that gave us huge pause. We have been validated in a big way by the fact that Home Depot came to us and said, okay, you're one of the only brands that seems to be embracing this and understanding where the market's going. And we also then saw, with the arrival of the major funds in the real estate market in 2010, 2011, that here was a grossly undervalued asset base in terms of distressed housing that has a life way beyond just the trade. Right. So, what we've seen is these vast funds, the Cerberuses, the Blackstones, the colonies, colony capital, etc., pour billions into this market and continue to pour billions. Right. They've just changed their positioning a little bit in terms of investing in it, because they see it as a hugely vast market, a very interesting and very stable asset base with a very long life. As long as, Maslow's law dictates we require shelter, there's a demand for, properties that house individuals. Right.
And one of the things that's interesting when we talk about the fragmentation and how that's obviously changing with institutional players coming in, I know you've been a big part of the voice at kind of capturing the transition to making this a investable asset class versus something that mom and pops or individual investors do. One of the things that's always benefited individual real estate investors is the fact that this industry is that there's so many inefficiencies. How do you see that? How do you see that changing over the years to come? Because this market has gotten more efficient in the last few years alone. I can feel it.
Well, and what you're going to see is far more efficiency. One of the things that is very interesting, and I don't think I'm, violating any non-disclosures, but when Home Depot got into it, the first thing they did was fund a study that we conducted, and that study said there were 8 to 9 million real estate investors, individuals in the United States. And there was this, $2.6 to $4 trillion asset base that nobody was paying attention to. Well, in the middle of it, the Blackstones of the world jumped into the business and said, okay, so what do we do with this? We're buying it low. We're going to renovate it, generate some income. And of course, their return on investment also includes an exit of some sort. And that exit turns around and suddenly becomes, concepts like, they're going to these companies are, packaging blocks of assets, and they're going to turn around and offer a Charles Schwab experience to passive investors using real estate.
Right.
And that's a way a lot of people can feed property in on the sell side and buy property out on the buy side. But the more interesting thing that I found, and you talk about fragmentation, is all of my previous lives have involved channel management, distribution as a big deal. And what we found was that when we were in the last publication we had, which was Technology Investor, based in New York, talking about NASDAQ stock, what we found was the distribution of stock was a federally managed and regulated environment, national in scope, based out of New York, and there was some pretty accepted standards in terms of suitability and appropriateness of investment to a client, and all the rules of know thy client.
Right.
Well, you turn around and you say, okay, so I'm going to invest in real estate, and you find right off the bat that the regulation of real estate sales, etc., is local in nature in terms of state jurisdictions with departments of real estate, and every one of them has a slightly different twist on it. Second of all, the individual real estate practitioner is typically even more constrained in their practice because of management scope, span of management, and local practice, right? And oh, by the way, I'm a neighborhood specialist.
Right.
What they've done at the same time that they've become specialized in neighborhoods is some have claimed that they've become specialized in the niche of real estate investors. And what you find is by saying that, they're already in violation of their licensing. Because if you have a real estate license, a realtor license, or a broker license, the first thing you're not allowed to do is talk about future value. That is considered to be bordering on talking about investments. And investments imply retirement, and that is a very strictly regulated area.
Right.
So most regulation, their errors and omission insurance as carried by their brokers prohibits investment practice. So what you discover is the whole regulatory environment is designed for the practice or the profession, whether it be securities or whether it be realtors. It's not designed to help individual investors and as customers. So there's a vast opening here for people with the right understanding of how to go about it, how to work within the rules and bring the appropriate regulation into the space, because it's going to come if we keep doing what we're doing. And as badly as we're doing. And then ultimately, we have this incredible asset class with things that are not offered anywhere else, and the ability to leverage it in a number of ways, just through appreciation, through borrowing, through tax implications, through real income, and all the risk mitigation that can go on with real estate investment. So it's a business that really doesn't understand itself, and as a result doesn't promote itself very well. Yeah. And I think that gives opportunity to a wise investor like yourself or one of your Flip Nerd subscribers or readers.
And so, Andrew, you see this as, what do you see coming here? You see them as an asset class that individuals can invest in, or this is going to get packaged and sold to retire, the school teachers and policemen, or everything? There's
room for everybody.
Yeah.
I mean, you can still pick your level of participation, whether you want to be an end investor, whether you want to invest directly and own a property yourself, or you want to participate in a managed fund. If you want it as a career, there are companies like Homevest that you can basically sign up with for $15,000 and become a Homevest associate and get all the education, all the support, all the technology as part of your ongoing advertising fee and royalties. But beyond that, when you start looking at some of the other ways into the market, there's a lot of people that are in transition from their corporate lives into what are they going to do for the rest of their lives, because the luxury of retirement is getting more and more remote for a lot of people.
Right.
The demand for housing, if you look at the demographics, it's just going to get bigger and bigger and bigger. And part of the problem that we've got with that is the demand's there. The existing stock is going to be priced up and up and up. And the new stock is not coming on at the pace it needs to because of the lending constraints and all sorts of other craziness. But at the end of the day, this is one of those assets that's going to attract a lot of people into it, good, bad, and different.
Yeah, what's interesting is that I try to not get too market specific on the show here, but in my market in Dallas, I mean, we have rental properties that we're in for, I'm talking about typically I tend to focus on what we call a C-class property. And those properties, we may be in them for, let's say $40, $50 a square foot or less, which is half of the build price. And those are in cities where they're never going to build again, and those markets are just going to continue to be a higher and higher percentage of rental properties. But those are just fantastic. I mean, they don't build rental communities anymore. You have to wait for them to age to get there, generally speaking.
Yeah, absolutely. And you've got to watch your markets very carefully, because what you find is that if you don't have the employment demand for those houses, or you have the wrong employment price point, minimal income, etc.
Right.
Some of that old stock that's aging into rentals is also aging out, period, and should be knocked down and rebuilt. And what you end up doing when you do that, it's either projects or price points that the average person can't afford, and gentrification occurs. So it's an interesting dilemma, and most of the so-called government solutions end up being very short-term.
Right. And so obviously there's been a lot of hedge fund buying when we're getting offers on our retail homes that we rehab and resell for literally full price or close to it from hedge funds, which can't sustain itself in most parts of the country. What do you think is going to happen with all this kind of buying, that where folks are kind of overpaying and pushing out some investors?
There are two classes of hedge funds. I mean, let's understand. The leaders are genuine leaders. These are very bright people that understand better than you and I what the dynamics are of money, buying the property, managing the property, and ultimately packaging or exiting the property. And none of these plans are short term. Then there's a whole bunch of wannabes or Me Too's that saw a strategy and copied it. They're not quite sure why they copied it. Short of if Blackstone's going to make money, so am I. Well,
Yeah.
Blackstone did it very strategically. The guy jumping into the market now is probably not doing it as strategically. It's more copycat, right?
Right.
And those guys, Me Too guys, always tend to get the short end of the stick.
Yeah. It's probably more of the folks that can raise money, and then it's the proverbial dog. We raise the money, now what are we going to do with it? So let's go and maybe make some sloppy decisions.
You mean as the dog that caught the car?
Yeah,
we do?
that's right. That's right. So Andrew, tell us a little bit about your background before you started Personal Real Estate Investor Magazine.
Well, I'm a recovering lawyer. I found myself recruited out of a law firm into a computer company that was essentially a startup that sold itself to Honeywell, and that division of Honeywell was spun out and bought by DataPoint. And the technology we were pursuing was the ability to account for telephone calls, right? So lawyers had an issue with the amount of telephony expenses in their long distance charges and so forth in their files when they were defending or prosecuting cases, and they needed to recapture them. So, I found myself in that business and realized that from the point of view, if you become a specialist in something, you're probably one of few. And so I became, specialized in the whole business of telephony accounting on the customer side, not on the telephone company side. Although it turned out that we were being driven harder by customers in terms of what they needed, and a lot of that flowed back into the telephone industry. We ended up building call centers because the basic telephony switches we were building were very high volume, very high management, and we discovered if we flipped them around, we could take calls rather than just originate calls. Right. And that got me into the telemarketing, the airline reservation, the catalog business, et cetera, in terms of how do you manage big call volumes and provide customer service. So I went from there we built a company, sold it off, took it public, blah, blah, blah. And a buddy of mine was a publisher in New York who was very interested in what we were doing in telephony. And we were doing something that was far more fun because we dealt with people as it related to telephony, as opposed to, lots of technology that related to telephone companies, who although were people, they were more interested in profit rather than the outcome for customer service, et cetera. So we were adopted, or I was adopted by this publisher who said, come to New York and help me publish a magazine on call centers. And we started that in 1987, and I found myself in the call center business. I went from there, stayed on the board of directors till 97 when we sold that company. In the meantime, my previous employer, Technicron Industries, launched a venture capital fund in Palo Alto called Visionary Corporate Technologies. They hired me back into as running sales, and I ended up running both sales and marketing there. We sold that. I found myself in the venture capital business with another company, and then got hired by Anderson to run part of their Siebel practice, their customer service, customer relationship management practice.
Okay.
I got hired. My partners decided to launch another magazine, Technology Investor, because we'd made a lot of money on the sale of our previous publishing company, and we thought we were really smart, but we couldn't find the magazine that we wanted to read about how do you invest. So we created it, Technology Investor. We sold that. It closed on September 10th, 2001, and I came home to Phoenix, and we know what happened on September 11th. We all sat around, licking our wounds as we watched the stock market crash. And I worked out that my real estate investments, I had a couple, had been untouched by this. And I thought, well, that's weird. What's going on here? Where's the magazine?
Right.
So I went looking for the magazine that would explain to me how to, get involved in the real estate space, and I realized there wasn't one. Yeah. Nothing on newsstands. There was a couple of newsletters. There were a lot of, gurus out there teaching. There were some books. But none of them were really involved on a day-to-day, week-to-week, month-to-month, repetitive basis like a magazine was. Right. And I did a little research, and I jumped into it. And then I discovered all the flaws and why it was different than the real estate. Why the real estate business was different than and real estate investments were different than traded assets or stocks, funds, and bonds. And so it was a matter of working out how do we navigate that in the context of this, what are the needs, and there were so many marketing opportunities in the real estate investment space. Here we are 11 years later, and we are building software for Home Depot and other clients based on mobile technology and complete business systems integration, basically back where I came from.
Right. And so you're not just the publisher of a magazine. You are a dating service and bringing people together and bringing some technologies that you're actually building. You're behind some of these technologies that are being built. Is that right?
I'm a partner with the development company. I'm doing all the selling for them. Yeah. Because one of the issues that people constantly tell me, and I say, look, I want to go to the beach, right? I'm tired of doing this. But what you find is that there are very few people that understand business process that can then articulate it into a solution and then build something to do that. Right. I mean, what you find with technology, whether it be mainframes, midframes, PCs, LANs, the web, or mobile, most people are brought up in just one niche, right? So when you say to them, and this is what happened at Home Depot, okay, we want you to interface with the mainframe, which, by the way, is running on 30-year-old VMS A.G. Edwards technology or databases, and they go, we don't do that. We don't understand it. Yeah. And you go, well, who's going to solve this problem? Because you've got data in that system that needs to be over here to be useful to either. Right. And so, what we found is that there's a huge opportunity for those going back into doing systems integration, and that's what we're doing with some of this mobile technology, directly focused at the investor market. Right. And if you're a national account for Home Depot, like Homevest is, you've got those technologies coming to you at no charge, right? Because they want to capture the revenue. And the first people to embrace this, by the way, were all of these institutions, because they saw the ability to leverage their manpower, huge force multipliers in these mobile technologies. And the mobile technology, I think we've only just scratched the surface on what this technology is capable of. Yeah. Because it's mobility and versatility and ability to do just about anything as a media computer or a terminal off an existing system leverages a lot of stationary technology.
Yeah, I can tell you for sure, the people that are on the front lines as real estate investors tend to be old school. There's just technology has not collided with the frontline guy in real estate. Generally speaking, I mean, there are a lot of folks in the Homevester system are, we're using iPads for a lot of things now, but there are still people that are, 10 years behind what a lot of where they should be, in all honesty, which really kind of feeds into that fragmentation and the inefficiencies and things like that, because there's so much information available to us as real estate investors or real estate professionals, but it tends to be in many different systems. It's in the county tax records, it's in different databases that you don't have access to, and very few people are pulling that all together. But I see it coming.
I mean, there's a very good example with Homevest and the implementation of mobile technology. The first thing is, you're absolutely right. There's multiple sources of the data, and there's no single vehicle, if you will, that plays traffic cop and brings in the right data at the right point in time in the process, right? Mm-hmm. So when Home Depot looked at the platform mobility as a process, they said, okay, where are we going to use this to leverage point of sale? So, Mike, buy something, right? Well, that's great, but in the process of buying something, there was some data created, and what did that mean? Well, Homevestors said, okay, if we've got this tool from Home Depot that allows us to calculate materials costs and labor costs, that is 1/4 of the data our agents need to know when they're buying a house, because we know what our margins need to be to make it a worthwhile transaction, and we know what it's going to cost now to renovate it, and we need to pull in the data from the tax records, the market comps, what the NOI should be for the income should be for this property, and the calculations related to it meeting fundamentals. The only thing missing was, okay, how much then do we need to pay for the house to make it a viable buy? Right. And that was a process that took many, many months for some Homevestors recruits to learn how to do. So they would, take 3 to 6 months to get comfortable with this process. Mm-hmm. We have, in many cases, collapsed that to 3 to 6 weeks, because we've taken a lot of what was considered to be a black art and we've put it into a mobile app.
Right.
So you just have to fill out the form and follow the dots, right? And join the dots, and you've got an answer. So that whole decision, that buying decision support component, came out of something else. But that data now is the pro forma that can populate a loan origination document that can be pushed automatically into underwriting to give you an answer as to whether or not you've got a loan to buy this house. And that's all happening now in minutes.
Right.
Now that sort of integration and seamlessness is hugely powerful.
Right. Absolutely. Well, I know you have a crystal ball. I don't see it there with you, but why don't you tell us a little bit about where you see things going, Andrew, over the next year or two? Because a lot of real estate investors are feeling it tighter in their markets to buy houses right now, largely because of interest rates are still low, builders are lagging us by a couple of years in many markets, hedge funds are paying more than we typically would for houses, and so that's caused some grief for a lot of real estate investors. Why don't you tell us where you think things are going to go over the next year or two?
Well, I don't think it's going to get any better for real estate investors who want to go it alone and do it the old way.
Yeah.
And my argument is we're transitioning now from a sort of a do-it-yourself hobby cottage industry into a retail environment where there's still a place for you as a real estate investor, don't get me wrong, but not just as the guy that does it all, right? So if you can buy houses and renovate them, there's a fund or somebody that will buy them from you to sell through their retail distribution system. Mm-hmm. And you'll take you'll either pay a fee for the distribution or you'll take a discount to exit the property. Then there's going to be companies like Homevestors who offer an easy way to get complete, cradle to grave support in terms of real estate investing. And you guys are the only people in the space at the moment, and that's reflected by your success with the associate franchise space.
Right.
I mean, your fee to join the environment and then your ongoing maintenance fees are less than most of these gurus charge for their second or third weekend and mentoring.
That's right.
And you've got lifetime support. And they yeah, good seeing you. Thanks for your money. Goodbye. Right? And, they deliver a lot less than they promise or pretend. Then there's the third thing. The whole realtor space is being organized by the likes of Own America who are setting up huge buying processes, they will go and scour the MLS and pocket listings and other options, bank REO relationships they have, etc., to determine if there are properties in there that meet their clients' buying criteria. Their clients are the funds and the mid-cap turnkey companies. So companies like Own America are basically mobilizing idle capacity amongst realtors. And realtors are real anxious to make money, and they have a local ability already, a local presence to go find those properties. Right. So Own America is also integrated with the Home Depot approach and integrated with Homevest, or about to be integrated with Homevest, as offering you properties that they've found to help you, enrich your buying side, because that's going to continue to exist for a long time. Because at the end of the day, the likes of a Blackstone, if they were to do it all by themselves, disintegrated from other people, they wouldn't find many of those properties. So, people like that and local turnkey companies will look to that class of vendor as a source of properties, or that class of conduit, I should say, because they're acting as agents rather than the actual principal in the transaction. Right. Which is a realtor's function. Right. Then on the sell side, a lot of these funds also are completely, are going through their inventory and are rebalancing them. So they sell houses that don't fit, they buy more houses that do fit, and they are using these agents to sell those properties into a retail environment. So there's that whole section of the market. Then, the individual associations and clubs and so forth, we're seeing a proliferation in that space, with a lot of people trying to essentially relive some of the old model and aggregate either vendors or lenders or whatever. I think they're sort of hanging on to an old model, thinking that they can, keep taking money from individual wannabe investors and not giving them a lot of value. And then there are all the multi-level marketing companies, the Strongbrookes, the Real Estate Worldwide, and folks like that are just network marketing companies that sell education. They're a total dead end for an investor.
Okay. Tell us a little bit more. I have just a few more minutes here, Andrew. Tell us a little bit more about where you're going with Personal Real Estate Investor Magazine from here.
Well, we're a print product to start with, and that's really important because, as everybody will tell you, print is dead. But at the end of the day, what you find is that print is credible, and that's a hard one to just dismiss. Right. We've got presence on Barnes and Noble newsstands, airport newsstands nationwide, and we still sell magazines. Right, so that is not dead by any means. It allows us, therefore, to publish a tablet version or an electronic version on all of the electronic newsstands. Now, we were really late to the market in terms of publishing electronically, because the whole assumption in the internet was if print is dead, the internet was free. And my question is, how do you monetize dead product in a free environment? Right. So, it was a contradiction. So when the world of the tablet burst onto the scene in 2010, instantly what they did, which was really clever, was they replicated the financial model of traditional newsstands. So I now could monetize our content in a electronic environment. And we were on the iPad within 3 months of it being launched. So we were very early to the tablet environment. We were never in the giveaway space. We try to avoid that like crazy. Right. We've gone a little bit back. We've backed up a little bit, and we provide much more free content now on our website, Personal Real Estate Investor Mag, and we're publishing studies. We publish a lot of economic stuff, in terms of telling people what it means to real estate investors, and a lot of just basic how-to stuff with some great partners. So that is what we're up to there. But in the middle of it, when I first saw the mobile app or the mobile technology, I went, here we go again. If you notice, every time there's a shift in technology, from PCs to LANs to local area networks to the web, all they did was reproduce what they were doing in a new vehicle. So when the first jump into the web for print product all they did was put a screen up that replicated a print page.
Right.
I mean, they didn't take any advantage of the dynamics, and that took a few more years to do that. And that's what happened with the mobile technology. All we were doing was, and we still do it, as it turns out, we create a PDF version and push it into the App Store.
Right.
But I just saw something that with this request from Home Depot to help them do a number of things, I saw something that I thought was a new platform and a new model for publishing and information distribution, giving the ability to be dynamic with the mobile technology. And we're in the middle of building that sort of technology now. So think in terms of Angry Birds meets real estate investing. I mean, that's where we're going with this. Right. And oh, by the way, it's full of rich media inventory to be able to be sold. So it's a mashup, if you will, of all of the things that we've been doing for years in terms of media and some of the other platforms that we've been involved in.
Right. We've just talked for a bit, Andrew. You shared a lot of insights on how the industry has changed with more institutional players and some of the smaller individual folks maybe getting squeezed out or having to reinvent themselves. Talk a little bit about how the magazine is changing to better support or provide content for the new players and the old players that are having to reinvent themselves.
Well, the issue that I think is really important that underlies all this is principle and standards, right? And you can't really conduct a predictable business that will attract customers unless there's a predictable behavior and a standards-based behavior. Mm-hmm. I mean, we got really sideways with one of these companies out of Memphis because we said there is GAAP accounting standards, generally accepted accounting principles that need to apply to rental property. You can't leave stuff out because it's inconvenient or it compromises your so-called return on investment. And they were pissed about it. Well, wouldn't you know, after 3-4 years, they've now adopted GAAP principles, but not without getting, really pissed that we were calling them on it, because at the end of the day, they were having to buy back properties from investors who they're disappointed by not meeting their representations.
Right.
And you can't run a business like that. I mean, it's a short-term play, and they got caught, and they had to buy back a bunch of properties as a result of it. And that sort of behavior, instilling standards so that the external customer can trust our industry, is the first step. Right. And people go, well, that's not a lot of technology in that. It's not sort of future thinking. But, at the end of the day, it's all about human nature and human behavior. And unless you reinforce good behavior and identify bad and force out bad behavior, you don't have an industry that's got any legs. And that's been the problem with real estate investing. It's been fragmented. It's allowed a lot of, shonky operators to thrive. And, I would challenge you, Mike. I mean, the worst people in your market are those folks that don't follow principles. You walk in with a comp price that's, sustainable with a lot of data, and they'll come in and undercut you, whatever the product or service may be.
Right. And
you go, they're going to lose money and go out of business. They're going to be cutting corners somewhere. And sure enough, the customer goes with them because they're cheaper, and the customer has a less than satisfying experience. Right. We see it all the time.
Yep.
I mean, I've always enjoyed being the most expensive vendor in most markets, and the argument or the statement made to somebody that chooses the competitor who's cheaper is, I promise you'll be back to talk to us in a couple of years. And inevitably, that they would have a really poor experience because the margins weren't there to deliver the customer service experience they were looking for and the quality of product, and they'd be back in our camp going, okay, so sorry we didn't go with you the first time. You were right. We didn't get what we bargained for. And at the end of the day, it's about our business, not about their, ability to sell us a cheaper product.
Right.
And we all buy our materials from the same places. We all hire labor the same places. And we all know what the costs are.
Right.
I mean, that's the great leveler, right?
Yep.
If somebody's willing to compromise their margin, they're going to probably go out of business on you.
Yeah, that's one of the challenges with real estate investors is there's so many people that want to do this that they come in, do a deal or two, get wiped out, And I kind of liken them to fire ants. You can, seemingly kill them or kill a mound, but they just keep coming back. So
the fire ant phenomenon of real estate investing.
That's right. That's
absolutely. Yeah, it's I think P.T. Barnum did it. There's one born every minute, right?
Yeah.
And you can fool some of the people some of the time.
And what's sad is
most of the time.
There's a lot of folks that deserve for this to be a vehicle for them to achieve whatever it is they want to achieve, and they follow the wrong people, or they get caught in the wrong system, or they say they can do it themselves and they learn they can't. And that's the frustrating thing for me, is being part of. I don't generally talk about the Homevester system too much here. You talked about it a lot today. Obviously, I'm one of the largest mentors and coaches in the Homevester system, but when we're talking to folks about joining and they decide that, well, I'm just going to do it alone, or I'm going to go with another shop that we know is just comparing apples and oranges, it's sad.
Well, the reason I talk about Homevest is you're such a clearly superior alternative, and you provide not only the core education and support systems, but you connect your pupils / associates with a proven business that's been in business for months, years, whatever, with the Homevestors brand,
right?
And then you're supplying leads to these people that nobody else is seeing,
right.
And then you won't let them get into trouble because they hurt your image and your overall performance as a brand, as a company.
Right.
So, I mean, when you go to one of these traveling salesmen, these circus promoters, these predators, it's about the event and making sure you pay them, and then don't call for any support because they've moved on to the next person.
Right.
They've got to feed the monster by selling, more people, more deals, right?
Yeah.
Not real estate, education.
That's right. That's right. Yeah. Well, Andrew, thanks so much for joining us today. I appreciate it.
You're very welcome, Mike. Good luck.
To see you as always.
Thank you for the opportunity.
Absolutely.
Offer your readers our magazine, Personal Real Estate Investor, or you can push it through Flip Nerd as a resource for your clients.
Absolutely. We have links. We'll have links below the video to get access to your magazine. If you're not a subscriber, I highly recommend it. It's really the only industry publication that's stood the test of time and has a lot of great information and resources in there. So we appreciate that. We appreciate your support, Andrew.
Thank you, Mike.
Yep.
Anything we can do for you, just ask.
I'll ask. Thank you.
Okay. God bless. Thank you.
Have a good day. Bye-bye.
Bye-bye.
Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to FlipNerd.com.